Ladies and gentlemen, good day and welcome to the Q2 FY23 earnings conference call of Data Patterns hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Monali Jain from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Rutuja. Good afternoon, everyone, and welcome to Data Patterns India Limited earnings call to discuss the Q2 and H1 FY23 results. We have on the call Mr. S. Rangarajan, Chairman and Managing Director, Ms. Rekha Murthy Rangarajan, Full-Time Director, and Mr. Venkat Subramanian, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that company faces. Also, please note that we have uploaded a revised presentation on exchanges. Please refer to the same for today's discussion. May I now request Mr. Rangarajan to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Monali. Good afternoon, ladies and gentlemen, and thank you for joining us today for our Q2 FY23 earnings call. I hope you would have seen the results presentation which has been uploaded, as Monali just mentioned, on the exchanges and our website. While Venkat will take you through the results, I want to briefly touch upon the key highlights for this quarter. We have delivered the highest ever quarter 2 and H1 revenue. H1 revenue increased 1.6 times in the last year same period, with profits increasing by 1.5 times. When you look at the H1 results closely, you will see the gross margins have been maintained at 65%. Another key thing to notice is that development contracts contributed higher to the revenue and orders this quarter. This is an important highlight because development contracts translate into production contracts in future and provide a good visibility for our future revenues. We have good visibility on our future performance because of a strong order book. If you remember, in our last earnings call, I had mentioned that based on the advanced stages of negotiations, we are on track for 1,000 crore order book. I'm happy to report that our order book stands at over 880 crores as on date, highest ever for the company. A large proportion of this is from development contracts, which eventually turns into production contracts, and hence we now have a very good idea about a medium-term revenue visibility. The order intake of 471 crore for Q2 has been much ahead of our expectations. Some of the large orders we received in H1 were 2 radar orders from DRDO worth 362 crores. These are development orders. Development and production orders worth 30 crores for electronic warfare. We also received an export order and production order from DPSU, totaling 22 crores in the avionics and naval systems segment. 2 more orders from DRDO for EW and communication worth 40 crores were also received. Today, our order book is well diversified. I'd like to spend a few moments and share my experience from the recently concluded DefExpo. Our capability in R&D, engineering, and execution was well recognized, and Data Patterns received Raksha Mantri Award for Excellence in Innovation and Technology for the year 21-22. I need to add here that this is the first time a Raksha Mantri Award has been constituted in India, and we were the first recipient of this award which was given in DefExpo. After many years, and maybe for the first time in the last 30 years, India's private sector defense companies now have the support from the government, which it had lacked for many decades. Honorable Defense Minister was clear when he said, Atmanirbharta in defense R&D, synergistic approach will help us achieve Honorable PM Modi's vision of Make in India, Make for the World. This is a golden period, and it will be a sunrise sector in future. The government has set the target of increasing defense production from $12 billion to $22 billion by 2025 and has reserved 68% of the defense capital acquisition for domestic procurement for the year 22-23 to increase the participation of domestic industry in the defense sector. This will be worth approximately about 85,000 crores, and 20% of this, 21,000 crores, has been reserved for domestic private industry. A quarter of defense R&D budget has also been dedicated to industry-led R&D to encourage private players. We are uniquely positioned to benefit from the sectoral opportunity as we develop complete systems in-house. We also have the best-in-class manufacturing facilities. We have been expanding these facilities and will be ready by this quarter. We have a strong debt-free balance sheet and good working capital lines. Our strategic priority for the next 2 years is clearly laid out. We will be focusing on larger opportunities in radar, EW, and the satellite business. Export markets will grow for us as we are working on multiple opportunities there. We will participate in over 20 to 30 billion rupees worth of contracts for the next 3 to 4 years. These efforts should help us achieve a top-line growth of 25 to 30% and deliver a strong ROE and ROCE of more than 20%. I will now hand over to Venkat for his comments.
Thank you, sir. Good afternoon, ladies and gentlemen. We are happy to inform you that we have delivered a strong and the highest ever H1 performance. I will take you all through the financial performances for the quarter that had gone by. Our revenues in Q2 and H1 grew 1.5 times and 1.6 times year-on-year to 88 crore and 156 crore respectively. In H1, revenue from development orders contributed in line with our guidance. Gross margin for the quarter and half year have been maintained at 65% and the EBITDA margin at 33% in Q1, in line with our guidance. PAT during the quarter stood at 21 crore at a growth of 64% year-on-year, and for the H1 it was at 35 crore at a growth of 52% year-on-year. EPS for the first half is at 6 rupees 80 paise. We have spent till now for the new facility, and the cash in the book is 68 crore at the end of H1. Working capital is well managed at 367 days. Slightly stretched inventory days due to planned buying ahead of time to mitigate delays due to semiconductor shortages and supply chain challenges. We will be able to maintain the working capital days in the range of 280 to 300 days in the medium to long term. Overall H1 performance was quite strong, generating record revenues. Q4 still is a significant quarter, but we can see seasonality coming down gradually. With this, we will open the floor for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sandeep Tulsiyan from JM Financial. Please go ahead.
Very good afternoon, sir. So first question is pertaining to the future orders that we're likely to book in the next 2 quarters. We mentioned in the press release that there are 128 crore worth of orders that are negotiated, but we are yet to receive LOI. If you can throw some light on these orders, and also simultaneously for the Himshakti and Arudra radar, BEL mentioned in their call that they are likely to get these orders by end of this year. So in all probability, one should assume that these 2 orders, we'll be getting subsequently from BEL in FY24.
Okay. Regarding the 120 odd crore which we have negotiated, large part of it, about 70 odd crores, is for the LCA Mark 1A cockpit display which we developed in 2005. Now the contracts have been negotiated. We expect the order to come this month. The other one is we were L1 for an automatic weapon loading system for tank. And also, I think the budgets have been released, so probably the order should come now. As regards Himshakti and Arudra, we are awaiting contracts on them. and back to back we should get some business from them. Yes.
Okay, so that should happen in FY24. And this L1 for tanks, should it be the balance 55-60 crores value, or is it lower?
70 odd, nearly 73-74 crores is for the cockpit displays. Then some few orders are there, smaller orders, and then about 30 odd crores is for the weapon loader.
Sorry, actually, it's not very clear, sir. If you can repeat that.
About more than 70 crores is for the cockpit display, and about 30 odd crores is for the weapon loader, and then some other smaller contracts, which will add up to the 120 crores we talked about.
All of them are negotiated and finalized. It is only that we are able to receive the contract on hand.
Yeah.
Understood. Got it. And second question is on this C295 aircraft. I think, there's an initial order on Tata Airbus JV for 40 aircraft, but recently some comments were made that there will be requirement for almost 2,000 aircraft over the next 15 years. So right now, do we have any play or any component that are going into these aircrafts, or what can be the future opportunities? Have you done any tie-ups with this JV? If you can just share your perspective on this one.
See, this C295 is an Avro replacement, some 16 aircraft fly away and the rest 40 being produced by PASL. This will be built as per the original specification C295, and the startup will build. So on that, I don't think there is going to be any electronic systems going to be modified or changed. So that is not going to be there. The good thing is that the C295 platform is being planned now that it's going to be done in India. MOD or Air Force and Navy and other people are planning a few other requirements for using the C295 platform, other than only, as a carrier of people. So there are discussions on clearances for using it in COMJAM applications, maybe for, navigation, like a P8I which you've done, some equations like that, then use it as a follow-on jammer. Matter of fact, the inquiries and follow-on jammer have already been issued by Air Headquarters. We are having some presentations in another couple of days with Air Headquarters. So this will work with modifying the aircraft and then building all the equipment on top of it. Our interest is to build the equipment which MOD wants. We are already ahead of the curve in terms of building these equipment. The design is already on, a large part is already completed. So we're trying to reuse EW systems already what we designed. So we are very working on that. We are also looking at collaborating with PASL if possible in such opportunities. If both minds meet, then we should be able to do that. On top of that, we are also working not in C295 per se, but other programs of Tata Advanced Systems in the surveillance UAV and picture. We have got some few orders. We expect to build more in India rather than importing everything and integrating in India. That's what I was always saying. We need to build an ecosystem in India. I think platform vendors like Tata, if we can work with them and build other critical sensors and equipment on board, that is the kind of clearing which is happening worldwide, and we need to see that this also happens in India. So yes, it's a good thing that Tata got this contract and setting up the infrastructure here. I'm sure out of the infrastructure, a lot more activity will come to India, and the people like us will also participate in that activity.
Okay, so in future you can have the navigation system and jammers opportunity there.
We don't know for sure. Yes.
Okay. And last question, sir, is on the BrahMos, the organization BrahMos Aerospace. The CMD made some comments that there's an opportunity of $5 billion of exports of this system itself. And since we do the fire control systems over there and some testing equipment, if you can highlight what is the typical value of components that we supply in a standard BrahMos Aerospace system, how much of this $5 billion can be the value of fire control systems and testing equipment? And secondly, is this again based on single vendor, or are there multiple vendors for these systems?
Okay, see, I don't know what the $5 billion represents in terms of how many missiles, how many launchers, etc. Only when we get configuration idea, we can comment on that. At the present moment, we are on the launcher business of BrahMos. We do the fire control system, which is what we call a ground-based launcher. We're also on the aircraft-based launcher, which is based on Su-30. There is also discussion that the smaller aircraft missile, which is being planned to be inducted or tested, will go into other platforms, in which case then we become an automatic choice. Since you have done for a larger missile on a large platform aircraft like Su-30, we become a choice, hopefully a choice in these requirements. So we expect some business to happen there. But we can't tell you for sure on the 5 billion what exactly is our contribution. We will not be in a position to tell you now. But more importantly, we have done the missile seeker indigenous development has been completed. We're expecting trials to happen. What DRDO says is the trials are expected in November, December. If the trials happen and successful, hopefully, if that is inducted into as part of the Indian missile program, as part of BrahMos, then that is also will be exciting if we can back-to-back orders from them. At the present moment, we need to await trials and see how the trials function and whether this is really can get converted to business going ahead. But yes, BrahMos, we are long-term partners to BrahMos. So we expect with BrahMos growth, we also will grow with that growth. In what quantity, percentage, I can't tell you. But yes, but they will also grow with that.
But you are the single vendor for these systems, right, over there?
Whatever we are doing today with the launcher, we are single vendor both for air and ground systems. We are single vendor. We also are single vendor to all the test systems. For example, the missile test system early imported from Russia. We have indigenously developed the test systems for the last 10 years. Plus, we are developing the test system and delivering it to all services, Army, Navy, and Air Force, obviously through BrahMos.
Got it. All right, sir. That's it from my side. Thank you so much.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Shalini Gupta from East India Securities. Please go ahead. Shalini Gupta may be requested to please unmute yourself if muted from your handset.
Yeah, can you hear me now?
Yes, we can hear you. Please
Okay. So, sir, what I was saying is that I've just started looking at the sector. So I had a few basic queries, if you could help me. So one is that what is the defense landscape like? For example, is it that a few companies are given a certain technology to develop, and then there is no further competition and no further outside competition, and then you keep supplying to the government? Because otherwise, if everybody is working on certain technologies, that would be a lot of wasteful expenditure, it seems to me.
So you see how this works is that look at it from a purpose to Army, Navy, Air Force. They buy equipment which is fielded for their use, either aircraft, ships, torpedoes, missiles, radars, whatever. So whoever can supply, meet the requirement, the tender is open. Whoever wants to participate in that requirement, they participate. Now, early days, obviously India was not designing anything, so DRDO was given a mandate to develop. So they had given budgets and programs, and they were developing in the labs, developing the products. Once it's field tested, they were actually handing over the technology to production to PSUs. And PSUs like BIL and HAL and BDL were getting direct orders from MOD for execution purposes. This is all within the government perspective. And in DRDO, when they outsourced the development and design of subsystems, people like us participated. And once we participate, we got the orders for the development trials. Once development is over, then we become the OE for that part which has been designed by us. So when BEL gets order further quantities from Air Force and Navy or Army, they back-to-back have to necessarily buy these from us because we become the OE. It's been designed and flight tested and qualified. You cannot at that point go and redo it again. So like you said, wasteful expenditure, and nobody has time and effort because it all goes many years of development. You can't repeat it. So that is where the single tender business comes later on. After we go through open tenders, get contracts, prove the product, then later on production we get single tender business. That's what happens. So it's not that some people are selected and you do these and you get single tender and for lifelong you keep getting orders. No. It is a competitive landscape and you have to win bids, develop the product. So this is on the DRDO side. Now MOD said that we won't import anything now. every tender will be open to Indian vendors. You can back-to-back tie up with foreign OEMs you want, but a mandatory 50% Indian content is there. So you need to do a lot more in India, and you win business. Once you win business, you do this here. So people like us who are actually wanting to build end systems, not just the components you'll be doing with DRDO, are now addressing the large market, saying that we build the end equipment ourselves without going to foreigners and getting this. So we want to build the equipment supplies ourselves in India. So it's a greenfield kind of market today, where everybody can approach anybody and then address the market requirements through proper tender process. We believe if it is designed in India, our cost of development and the IP cost, we will be able to contract if required and take a view on how to sell it, be more competitive, and also meet the 50% Indian content which the government of India wants. So that is why the market is. The market is very huge, and the market is just now started being addressable by Indians. So the market opportunity for scaling is enormous.
Yes, sir. Then the next question obviously is, from where do you get the technology? If it's got to be developed indigenously, I mean, do you where do you get the technology from?
We have been designing products for the last 20 or 30 years. The company is about 37 years old. Ever since the company started, we have been designing products on our own in competition with foreign systems. So what we started doing is, if you look at any big box, it contains a number of building blocks. The building blocks are being imported by DRDO, and some of the blocks was customized and done. What we decided first when we entered this market 20 years back, that whatever DRDO imports from standard parts from outsiders, we will design those systems here. So we started developing those systems. Gradually, our competency increased. We do across the stable electronics. We started building for all platforms, space, air, water, underwater. So that competency increased, the QA process, everything increased. Now we start building our own domain, our own radar. So we upgraded certain radars for non-defense applications like ISRO, tracking radars, etc. Understood what is there to be. This is all 10, 15 years back. Now we build our own radars. So, though we find it difficult, you have to persist in development. It is not an overnight job. It's a hard way up because you're starting from building block onwards, build end systems. But the good thing is, internet is there, documents are available, your engineers are very bright. Given an opportunity and leadership and committed research, I'm sure we should be able to build a lot of these systems, which is what we are doing now. So we have taken a long journey of developing from scratch and building systems. Today, it is going to augur well for Data Patterns because that is what Indian Prime Minister wants, do in India. So, while other people are trying to tie up, we are trying to see what best we can do ourselves here. With limited tie-up, can we build more here and be more cost-effective and support the program for longer rise? So, yes, it is difficult, but second portion also is yes, we can design it here without having to go abroad and get things done. This is also possible. In areas where we have developed over the last 20 years competency, we can continue to build on those competencies. And
most of the, all the engineers that are working with you, they're all Indian?
In our office, we have about, as of yesterday, we had about 520 odd engineers working with us. All are Indians. We take fresh engineers from college, train them. There are about 1,000 people working now with us overall, and out of which 520 odd are in design and development, and QC and whatever.
Yes, sir. My last question is that you yourself mentioned that about 80,000 crore worth of defense orders are being given out, were being given out for the current year, that is financial year 23. Now, going forward, say 3 years or 5 years from now, where do you see this 80,000 going up to?
The defense budget on capex today is about 1.2 lakh crores or something, and we do 3 to 5% to 7% increase year on year. And based on our neighbors and the kind of tense neighbors we have, we continue to do expenditure on defense. It is going to be there. So what happens is we have earlier been importing systems, and there are appropriated contracts for Dassault to so many other contracts are there. So that also limits the budget which is accessible to Indians today. So as we go along, more and more of this budget which the Indian is spending, if they don't import it, then it is not directly G2G contracts. It will then be addressed to MOD tenders here. And once more that is done, this will be addressed by the Indian vendors. So I see scaling happening on the expense pattern, on Indian contribution in all these tenders going up substantively as we go along.
Okay, and sir, you've been talking about I'll get back in the queue. It slips me, sir. Thank you so much.
Thank you, Shani.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, we'll request you to please limit your questions to 2 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Jonas Bhutta from Birla Mutual Fund. Please go ahead.
Hi, sir. Am I audible?
Yes.
Yeah. So just a query on the working capital, which seems to have got stretched.
Yeah.
And, while we understand the increase in inventory maybe for semiconductors, but we've also seen an increase in receivables. And given that we've had a decent order flow in the first half, and particularly in the second quarter of almost 400 crores plus, the advances for these orders don't seem to reflect in your balance sheet to that extent. Ideally, one should have got at least a 15% advance or 10% advance on this, but our current liabilities don't reflect the same. So, in light of that, if you can help us understand what's happening with receivables, why this stretch, because budgetary clear this year they have sort of, you mentioned that there is a certain amount set aside for domestic procurement.
I'm sorry to interrupt you, Mr. Jonas, but your voice is breaking in between. The question is not clearly audible.
Yeah, is it audible now?
Then I'll explain whatever we could hear. 2 parts to it. One on the stretched inventory. One part of the stretched inventory is because we are buying more material, which you also mentioned. Now, material we are buying not only for execution this year, but for execution next year also, because a lot of our components we ordered last year, some few pieces of those components have not been received even as September, October this year. Now, what happens, that puts us in a very great difficulty because the extra components are in stock, but one component is not there, so I can't dispatch the equipment. So to avoid these kind of things, now what happens, we're taking advance decision on expected contracts also, because we need to keep that delivery mechanism on. We are new to this kind of a market, and we've been, it's a yearly business all along for us. We're trying to build a quarter to quarter business now, and even out the quarters rather than having 80%, 85% in Q4. So in order to do that, we need to see the material availability flow should not be stopped. So our focus is to see that material availability is there. So consequently, the inventory build-up is happening. But we're not worried about it because this will all change. And we're buying material only for contracts on hand. So it's not a, meaning expected contract kind of thing. So it's not an issue. So we will, the next 2 years' time, you'll see things is coming down. As and when the shortage supply in the inventory position in electronic parts gets down. All the receivables, see, these are during development orders and even the first production orders. The first order, always, the acceptance tests and procedures take a long time because in the development orders, we deliver part of the system. We don't deliver the full system. Then they get the rest of the things and then go through, acceptance test to that and do the field trials. Sometimes the trial gets stretched, sometimes changes are necessary after they do the trials. So they hold some money to see that we can do this. This is part of the way India works, or government works. And this is the business which we are in. But the good thing is after that is done, it becomes single vendor contract, the repeat contract come. Then the problems are not so many. We get very clear acceptance processes and we will deliver and the money collection is faster. Initial years, the development contracts are major. So then the development converts to major production contracts. You see the working capital flow, better timelines, everything will come down. And these are actually once stretched with a few contracts, very large development contracts actually get stretched, and those are the things which will be reflecting the value of the number of days. Having said that, we've also now started delivering directly to MOD, but that is also a learning business because the first time we're doing with MOD, and these are not contracts which has been developed, designed earlier, and approval has not happened because MOD is placing first orders to us. And though we have designed it, the acceptance process, MOD's way of acceptance, all of them is also a bit new to us. We're going through the process. These are all learning curves in early days. So I'm not too worried because These are huge, huge opportunities for us, and this is the first time anything in India has been designed from scratch and then delivered, and it's a very complex radar. So I'm glad to say that the first radar we delivered in March, the acceptance is already over. So the bill processing will happen. The second radar is under installation. Third has been accepted, in factory acceptance is over, and dispatched to them. So in early days, so things will change. So we're not very worried about the residual status for the time being. We will come back to the residual status the way we planned between 270 to 80 days, 300 days in the next medium term, short to medium term, we'll be very much there. Second part of the question was in the advance. The orders we received 470 odd crores was the last quarter. The bank guarantees have been made and given to them. We expect the advance to start coming in. But then those advances are not shown in working capital days. Venkat, can you explain this?
Yeah, see, advances are not only under current liabilities, both under current and non-current liabilities is applying. As of 30th September, it is around 39 crore, which is reflected under other non-current liabilities and other current liabilities in respective sections, because it is bifurcated based on the aging of advances based on the delivery schedule.
And on the large orders we received last quarter, the advances will be coming this quarter. Yes. And next quarter, you will see those advances or deposits in our bank. You will see that will go up to a couple of 100 or 150 crores kind of advances are expected in the next 2.5 months' time.
Got it. And how should one think through, sir, because you have a decent pipeline of orders, at least for the next 12, 18 months, clear visibility. So, over this period, is procurement of inventories largely done in anticipation of those orders, or that will further elevate the level of inventories as and when those orders come in?
I think one thing is, since the gross margin is reasonable, the electronic components, even if you order a bit, it is not really a very large percentage of sales. So that is one comfort point we have, because we are designed by us in India. But coming back to the question which you said, they're not, in very, very small areas where the orders 100% going to come and they have an accelerated delivery program, which the customers told us earlier, we start buying components. But for major orders, production orders, when we have a stretched delivery of 1 year to 2 years' time or a stage-wise delivery, we do not order the parts, except in the first stage maybe it's required. That also we don't order the parts and inventory. The orders for 800 crores has come, and more than 300 crores in just the new design. So only a design completion, the components are finalized and orders can be placed. And this is a 2-year delivery program, about 18 months to 20 months. So we have not ordered any material for those. But some component orders we have placed, but that is all with clear understanding of orders, available components, what needs to be ordered, which is going to be long lead time, and there can be a problem of pressure. Only those we order.
Got it. And my last question was, sir, if we build in these orders that you have set in your pipeline and which you've spoken about earlier, say by the end of FY24 or 25, all of these orders were to sort of come to you, how would the shade of the order book look like today, given that we've bagged a massive order on the developmental side? But if you can give us a shade of your order book, say, FY24 or FY25, how would that look like?
I wish I can say for certain, really. I can only say pipeline exists, but I have no control over the timing of the order. There is more than a couple of thousand crores, 2,000 to 3,000 crores at least minimum 2,000 crores of pipeline created, which is to be single vendor orders on us. But we have to wait and watch when this inquiry is going to be EL or HAL and back to back when the orders come to us. But having said that, we're also working on other contracts where, we expect that some more contracts will happen for new areas where we are again uniquely positioned in terms of product capabilities and development already carried out. So we're not just depending on the pipeline created with earlier orders, we're also generating more pipeline for ourselves with unique probabilities where single vendor contracts are also expected. So, but having said that, it's an overview. I can't really be specific an exact number of orders because that will not be fair, and I have no control over it. Pipeline is strong. That is all I can tell at the moment.
Sure, sir. This is helpful. Thank you and all the very best.
Thank you. The next question is from the line of Ranjit Shivram from Mahindra Mutual Fund. Please go ahead.
Hello, am I audible?
Yes.
Hello. Yeah, hi sir. Congrats on good execution given the challenging environment. Sir, just one thing which I would like to understand is the gross margin which was lower. So despite there is a kind of cooling in commodity prices and we have executed more of development order, we were expecting the gross margins to improve. So what led to this and what's your outlook there?
Okay. On the first part, which you assumption is cooling in commodity prices, that is not true for electronics. Because of COVID, all component prices have gone up. It is not cooling; it's actually gone up because components are in short supply, and because of short supply, there are a lot of in-between traders who make money on it. So component prices have actually gone up. It's not come down. Maybe it will come down again the next year or so, but as of now, the component prices have not really come down. Okay, away from the fact, we'll talk about gross margin. See, gross margin is worked out based on contracts and projects. It is not uniform across projects because it depends on budgets, it depends on whether it's single vendor, whether it's tender, limited tender, open tender, based on which on competitiveness we quote. So it varies from contract to contract. So we can't really say if every unit has the same gross margin. Having said that, what we are giving guidance is that on an overall year, we should have, for whatever we have already quoted, and we know which contracts we are executing, I think this year will maintain gross margin around 64%, which is what we are mentioning. And we have retained that for the first half. We have maintained that we have achieved the 68%. We'll continue to do that. What you are talking about is come down from previous year to this year because there are a couple of contracts last year which is much higher gross margin. So that is how it was reflected. But that could be very short contract specific. If the same order comes again, maybe the gross margin go up. But we are retaining guidance of 68% gross margin for this year.
Okay, and another thing was the most of the order intake we have got in H1 is developmental orders, which are kind of a longer term in terms of execution. And they will still stretch our balance sheet because these will add to our receivables only going forward. So which are all these? Any particular color you can put regarding the development orders which you have got? Any promising in that? If you can add some more details on what kind of development orders that we have got. Anything that you would like to highlight?
In the last quarter, on 400 crores development order we have shown, 360 crores is for 2 radars. This is a very, very important strategic radar. This is for space surveillance, where India has to protect its space. So we're trying to build the largest radar for India will be these 2. But what has happened today is, for a change, DRDO decided that as a radar, full radar, we will outsource this as a contract. Only software they will write. That is including generators, building, everything included as a full radar. And we were very keen to do this because what we are doing is a radar which is downsized 20 times from the actual size of the radar. So the electronics will be common. Of course, the building facilities, power, all those bottled equipment which you integrate this will be different. But the electronic blocks which is designed for this will be multiplied as its various because we will not design it again. This is a development contract for that. So we build a radar. We built 2 radars, one in UHF and the other in SWAN. And these will be very long-range radar, about 3,000-4,000 kilometers tracking. So once this is finished, we expected that 10 to 15 times the size of the radar will be contracted on us because we've done the original development we'll do, is what we expect. So the order size will be very high, and many radars of that to cover Indian space will be required, which will go maybe 5,000-6,000 kilometers inside space to find out. So it's a very large, and it will be the largest radar developed or designed or produced or even installed in India. So that is the important thing on the radars, and that's why we took this. It's a very strategic radar and also can scale substantially after we deliver the first system. And it's supposed to be slated for delivery in the next 18 months or so, 19, 21 months. So it's not too long term. So we will do this. And also in here, we get 30% advance, plus on material ordering, we get another 30% advance. So cash flow also is taken care of in this contract. Of course, against bank guarantee. But then, at least cash flow is covered, and we take care of expenses on this contract. That's also okay. This is on the two large radars. But the other question is, development contracts tend to be delayed. Those days, yes, but these are now less than 2 years because a whole lot of development we've done earlier. So we tend to reuse a lot of development skills which we have, so we're able to address this. Acceptance just takes a longer time. But that's okay. That is okay in the larger scheme of things, where growth is going to be substantial. I think we can accommodate all this if the margins are available.
So then, will next year growth will be kind of muted because most of the orders we are getting is developmental. So where is this growth going to come next year?
These orders are not executed this year, no? These are going to be executed next year. So we expect very reasonable growth next year. Because these orders you're getting now is going to be executed next year. We're not executing this year.
Yeah, but sir, it's instead of production is more of developmental, right? So if production is 1 year, developmental will be 2 years, right? Execution time frame.
No, don't look at it like that. The radar size is so large. Is that the development, so-called development, we don't do in one electronic box. This is 3,000 boxes which goes into one radar. So it's as good as a production contract. We do the development in 6 to 8 months' time, go and test the subsystems. After we get into production mode because the radar size is very, very large. It's a huge system. So, so it's as good as production, though the parts are being designed first time, but finally it becomes a production. But anyway, for this contract to repeat, maybe 3 years it may take, but that time the size of contract will be 5,000 crores or around that. I don't know exact value, I shouldn't say that, but it is expected to be a few thousand crores is what this can propel itself. So this is good. But having said that, we have other contracts which we are getting, which will go into production, whatever we developed earlier days. For example, like Sandeep was asking from JM, the Bhim Shakti, Arudra kind of things, which repeat orders have to come. The size of business is not as large. LLPR or Ashwini can be much larger. But all this will come, and those are production contracts which will go up year after next, or next year something will go, year after next something will go. The pipeline is there to take care of the order flow and the increase which we estimate to scale.
Okay, so because this orders of Arudra and Ashwini is still getting delayed, so that is why we were a bit worried. Like, is there
worried about it because you have other contracts to compensate. We are getting new contracts. Some more development contracts are expected and we already started design for the development contracts. See that we ahead of time we deliver those systems. So that's why we increased our manpower strength. We built up more than 120, 140 engineers we recruited. So we're doing all a lot of stuff to see that we scale, we deliver on time or ahead of time, because we want to keep that development guys there. We look at large opportunities MOD is throwing out at us. More than just DRDO, we are looking at MOD tenders, and there the system level development has to be done, which is challenging and which is interesting. So we want to actually look at that to scale our growth. Each order being few hundred crores to few thousand crores. This is what we need to really look at, and the scale can happen from there.
Okay, sir. Thanks and all the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Arshad Kapadia from Elara Capital. Please go ahead.
Thanks for the opportunity and congratulations for good results, sir. Just 2 questions from my side. Just wanted to check with you. On the RF seekers which you are developing for BrahMos missile, are you going to have a competition for these seekers, or it will be solely, being right now developed by you?
There are 2 vendors selected for this, Data Patterns and ECIL.
Okay.
So based on delivery acceptance, if both are working well, I think we will divide the contracts if at all it comes. And then based on delivery, more will be delivered depending on how they want to see. They wanted to have a public sector also attached, not just the private sector when the contract is taken. So ECIL also is there as part of this program. The only difference is we design everything in this. ECIL has bought and integrated a number of subsystems. But competition, right, yes. You can also work with them going ahead is what we think.
Okay. Is there a possibility that it could be split between you and ECIL? So let's say you get Army and Air Force, which is your concrete base in BrahMos, whereas they may get for ship or submarine. Is that something which is a possibility?
That's not how they would see it. It's a missile part. It goes into the missile.
Right.
So for that, the seeker is common. So it doesn't matter where the application goes, the Army or Navy. They look at number of missiles and see number of units. And that is how I expect it to be, because this is something which BrahMos has to decide. So I really don't know. First we'll await the trials, let the trials get over. And then after which we will, both of us will go and Josh will ask them to see that it's done in India rather than abroad, because Indian cost is less than 50% of the foreign imported cost. And there is a move to do more in India. So it doesn't make sense really to import it as long as we meet and exceed specifications. So we wait and watch the trials happen and then see where it goes.
And then, as you mentioned at the start of the call, in November, December, the trials are expected. And how many number of trials will be there, and by when the results will be out? Any timeline that you can suggest?
At the moment, they want a captive trial on using a Su-30. That will be first trial. And if that is successful, they want to do a missile trial. Missile has been identified and kept. So you do one launch. Depending on the trial success, they will say whether more launches are necessary, or will they say initial some more pieces have been produced and some more launches will take place. I really don't know, because we've not come to that level now. So they have to do trials are supposed to have done 1 year back. It's got a lot of delays. So we're all waiting for trials to happen very anxiously. Let it happen, and then we'll know where to take it from now.
Understood, sir. And second question is on, on the satellite business, sir. How are you seeing the order pipeline there? Because earlier you were, saying that radar, your EW system and avionics were the three major segments where you are seeing growth. Now you have also said satellites as well. So are you seeing any activity or anything which happened in the defense sector which you can highlight on the satellite side would be helpful, sir?
As of now, satellite is in my mind. It is a latent demand. There is a latent demand in India for defense satellites, but it has not been translated into actual contracts. So we are still working. We have built a capability model to build the entire satellite, including ground stations. We have done the systems on a small demonstration capability for a nano satellite. We've launched nano satellites. We have orders of nano satellites delivering, but these are all small things. To us, why we took this up is a technology demonstrator. We have spent 7-8 years and developed complete competency of building the entire satellite ourselves with no imports, including ground stations, the telecommand. And satellites are working 3 years, 4 years, we're still getting signals all properly. So that capability and experience is what we gain. Now we can build a serious 300 kg satellite, but we are waiting how Government of India will look at other than ISRO. How are they going to contract these things? We do not know. So we are trying to work with ISRO to see how we can do this on a commercial level. So it is still a latent demand, but I think sooner than later it will get translated to what we believe, because if you build an ecosystem, we need to do this on a system level. We can't do what we're doing and expect us to change substantively. The good thing is India is one of the space-faring nations. Very few are there in the world, and we have a competency model which is very, very good. So we should, from a perspective of competency and capability and strength, if you want to build on your strength, we need to do this, and industry has to participate in a very, very strong way, including design and development, rather than producing for ISRO. So I think the change will happen, and change happens, we'll be ready. So we are going ahead of market curve and building a competency. Matter of fact, the nano satellites of ISRO, they buy all the parts from us, including ground station, ours, and single vendor. So there is a understanding that we are a reliable supplier. We have a competency model. ISRO also knows that. I hope it translates in business earlier than later.
Fair enough, sir. All the best for the future. Thank you.
Thank you. The next question is from the line of Mihir Manohar from Carnelian Asset Management. Please go ahead.
Yeah, hi, thanks for giving the opportunity, and congratulations on a good set of numbers. Sir, I wanted to understand on the working capital side. I mean, if you could make us understand how does the working capital differ in production contract versus development contract. I mean, how are the advances different, and something on that side. So that was my first question. Secondly, on the 20 to 30 billion kind of orders that you are mentioning, I mean, are they largely single vendor contracts, and across which regions, which areas are we looking these particular contracts? And thirdly, on the order book, I mean 850 crores kind of order book that we are having. So I mean, what is the execution period over there? You mentioned about the 360 crores kind of radars, the strategic radar which is there, that the majority of that will execute in the next part of the year. But if you could throw some more light as to how this 850 crores will get executed over the coming 2 years. Yeah, so those were the questions.
I didn't hear the second question. We will answer the first and third properly, then come back to the second. I want a repeat of that. As far as the production contract is concerned, again, it depends on contract. Contracts from DRDO, from production contracts from the PSUs vary. Sometimes they give advance, sometimes they don't, but not exceeding 15%. But and then MOD contracts also have 15%, 10 to 15% is the advance which comes from those kind of contracts. But the good thing about production contracts is, when they give a value of the contract, they give the advance for the whole value. There are deliverables every quarter or every year depending on the need. And it is not necessarily all orders are executed in a single year. It probably sometimes goes to 2 years or 3 years' time. In which case, then we can plan our quarter to quarter, half a yearly delivery. And that, as you deliver, you get the rest of the money for the deliverables. So part payment on deliverables also is given. This is how the advances work on the production contract. And the second point is, we talked about order book, about 800 crores. What is the order book? There are development contracts and production contracts in the order book. I think most of the orders, except for one order which is 3 years, 4 years old, which is, that order is still not been booked at all in this. I think all the other orders are generally less than 2 years, around 2 years is over, except single order. BrahMos is over 3 years, but that's a small part of the overall business, over 50 crores. So I think these orders are on hand, and what we have now will get executed in the next 24 months is what I think, 2 years probably get executed. And on the development contract, we talked about that radar order is also a 21-month delivery program. We got the order a couple of months back. So let us see, towards the end of the year, we see if we can dispatch it for beginning year after next.
Sure.
And the question I didn't hear properly. If you can repeat it, I can answer that.
Yeah, sure. So the second question was on 2,000 to 3,000 crores kind of an inflow that we are expecting in the next 3 to 4 years. So I mean, are these largely single vendor contracts, and in which areas are we expecting these orders to come in?
Yeah, whatever orders we say we expect, it will be only single vendor contract, because I can't talk about tender situations because we do not know. It's a 0-1 situation, either win or lose the contract. So we don't talk about it. I'm talking about executed orders. Why we say single vendor is because already we've executed this on open tender some time back, delivered the products, and repeat requirements are expected from MOD business, either directly to us or mostly through DPSUs. So this is why the pipeline we're talking about. And coming to the second part of the question is, it is in this 2,000-3,000, the large value is going to be radars, because this is what we've delivered in 2015-16, which has all been accepted. And BEL is the production agency, so the radar order should come to us. Some things are in electronic warfare. Again, BEL is is a final system integrator for and the delivery of the EW systems for India. So back to back, they should also give back these orders. Third area can be again EW and the communication systems. There HAL may be the recipient of this because they do the full systems in aircraft. Then back to back, we may get the orders from them. So, and fourth is the avionics, which has been done in open tender with DRDO or with HAL. We won contracts in open tender with HAL, and then repeat orders from HAL is now coming. The good thing is that because of Indian program tried to do in India and reduce imports, whatever HAL imported in cockpit displays and things earlier, they're saying, can we use data part and supply displays in those aircrafts also? Because we want Indian content here, and the government is pushing for Indian content. So that change is also happening. So unexpected contracts also we may get in the years to come as they change from an import-centric procurement to a local procurement. Maybe we will get some additional business. But anyway, these are all the kind of contracts we're talking about. We should be single vendor.
Sure. Understood. Sure. And just a clarification, I mean, in the earlier comment, CFO sir mentioned that you would receive 100 to 150 crores kind of advances in the next 1 to 1.5 months, right? So the number is 100 crores kind of advances.
Yes, these are the radar orders already we got. The bank guarantees have been given, so back-to-back advance will come.
Got it. Understood. Thank you very much. Yeah. Best of luck.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, kindly limit your questions to 2 per participant. The next question is from the line of Akshay Kothari from Envision Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, just on the single vendor contract which you mentioned, 2,000 to 3,000 crores of opportunity. So, is it safe to assume that your margins on these contracts won't go down considering that you had supplied it back then and it is a repeat requirement. So there is a price cap key. Of course, you won't go below that price. And would there be any escalation on these contracts?
Normally, I would say yes. This is what we want to have. Margin should be there. There is also, of course, there is a dollar portion in this. So there is a dollar variation cost we need to bring in and talk to the customers. We have to discuss with the customer and see where the actual numbers come. But normally it should be, is what we would like to have. Escalation also happens because supplied many years back, our costs have gone up. Also the component costs, prices also goes up with number of years. Newer component may be cheaper, the older component may be larger value. So we will have to sit down and discuss this with the customer and arrive at a number. But it would be roughly around the range. If not higher, it should be on the range is what we would expect. But we will wait and watch because when you go production, there are other costs also involved. When you do multiply the same system, you need to build in test infrastructure. There are some overheads in that, there will become some capex will have to come into picture. So these are things we have to explain to the customer to see that we can make it reasonably, we can deliver this as we delivered earlier. But I can't comment on it, but I don't think that should be at the present moment, we can't talk about it, but it should be in similar lines.
Okay. And sir, which brings me to the next question on the capex. You had guided that you could do around 650-700 crores of revenue from the current capex plus the current existing facility. So considering we have got a very good order book, are there any plans for further capex?
Already what we've done now is to double the infrastructure in terms of production capability. We have one pick-and-place automatic line. We now ordered one more which is coming, some more vibration cables, some more thermocycle chambers, some more testing. We've added a lot of stuff as part of this which we ordered last year and things have started coming in now. So more than 100 crores of the infrastructure investments being made to double our capacity or even take it further. But on top of that, we also have created a different kind of infrastructure where we can do end equipment. From a box build or avionics kind of typical thing which we are doing for subsystems with DRDO. Today we are trying to mature into a MOD business which is a full systems, full radars. So we have a hangar space created where 10-ton gantries there, we can pick in material, we can bring in 10 to 15 vehicles inside, trucks inside, outfit trucks, put our electronic warfare equipment, put truck-mounted radars. Things like that, we have created infrastructure. What we would require for future business, that also is being created parallelly. And the idea is that we will, for MOD, we need to have, test infrastructure or, we need to demonstrate the systems as part of contract requirements. So we created infrastructure for all of them also, so that we can build the systems, take it to MOD tenders, see that we win large contracts. So on larger capex for infrastructure, we already incurred. What capex we will do in terms of production order happens, in the same parts, multiple times production quantities increase, we need some test infrastructure for this to see that we can produce 100 and 500 instead of 5 and 10. That line has to be set up. For the line, we may have to add some capex. That will be depending on the project. And depending on the project requirement, the capex will be taken care of. But that will be expensed out of the project itself. These are all what we're doing as general infrastructure. But what we will do there is the project-specific infrastructure, which will be part of the cost of the program itself.
Sorry to interrupt. May we request the participant to please rejoin the queue? We have participants waiting for the turn.
Okay, sure.
Thank you. The next question is from the line of Yellappa Santosh from Asian Market Securities. Please go ahead.
So thank you for the opportunity. I had a couple of questions. I joined the call a bit late. I would be very thankful if you could please share the details of the radar order that we are reporting under order inflow of 360 odd crores for this quarter one. And second, we have shared in slide 30 few programs like radars for NUH, next generation SDR for fighter aircrafts, next gen RWR for fighter aircrafts, and next gen comment, where we have developed the prototypes and delivered is my reading. So what is the status of these 4 programs from a mass production order? Thank you.
First is, we've got 2 orders for space surveillance. This is given as an order, a contract for the entire radar. not just the electronic subsystems. And those are the orders which is a very good order in our mind, is because this is going to scale. It's a very large order. Later when it goes, it will be multiple times the size of the radar. This is only part of the very downsized radar which we're doing. So it's going to be good. So this is an exciting contract for us. So we took this. That is the first part. On the second part of the question on NES SDR, we had a prototype of the NES radar. It's been delivered last year, and they've also flight tested on Dornier, based on which we have expected some more contracts to happen. SDR also we have for Air Force, for fighter aircraft, we have delivered the first sets, and some additional orders have come for ground systems also. That's are under testing. We expect more contracts to happen. These are all coming in development mode in DRDO. After DRDO really clears this on all fighters, maybe Air Force will consider it. We do not know at the present moment, but we have delivered those systems. Similarly, on ground, we have delivered the systems in acceptance trials now. The RWR, again, we delivered, it's done, it's flying in the LCA, trials are successful. More trials are expected. And more versions of the RWR also been ordered. We have also delivered a very fast track delivery we did last month for Su-30. So we are delivering systems which DRDO wants, and that is all going to go into flight. But flight test and further orders is not going to be in the next few months. It will take some time because aircraft trials take a long time. But yes, these are all world-class systems. We expect things to happen positively in all of them. The systems are working well, and these are world-class. So hopefully all this will mature into production contracts earlier than later.
Great, sir. Sir, and just lastly on these 4 orders, is there any other competitor also who has shared or developed this or given the prototypes to the respective DRDO labs for these 4 orders that I just talked?
Not in India.
None of the Indian companies you are mentioning. Is my reading right?
No, nobody in India.
Okay, great, sir. All the best, sir. Thank you.
Thank you. Participants are requested to please limit their questions to 1 per participant. The next question is from the line of Sahil Sharma from SS Capital. Please go ahead.
Congratulations for a great set of numbers, sir. What I wanted to understand is in terms of our engagement with the government entities. Let's say we are doing some development contracts. Typically, what percentage of such contracts mature into production contracts? And also, typically what is the scale up like? Like if the development contract is for X rupees, then what can the production contract be like for in a range terms?
Yeah, very difficult to answer it in a quantitative way. We also learned with 20 odd years of working in this with DRDO and development. We find that very small subsystems which we developed really doesn't immediately mature into production contracts. So what we have learned with the maturity and engagement with various government entities, try to be selective in what we want to do, where we believe the chances of production contracts will be or scaling is going to happen. So we've been very selective in the last 2 years where to go. Second thing, what we also did is we are not really participating in very small one-off, PCB level contracts. We're actually, if you look at a contract or a radar, we do a large part of the radar, maybe 60%, 70%, 80% of the electronics, maybe 100% of the electronics. So a very large part is being done by us. That also, if the program is successful, then also there's a large success probability that this is going to be produced in numbers or quantities which originally reflected will happen, because it's not going to go into any false things and integrating a lot of issues. Actually, we integrate and give now. So the probability of failure is very, very low. So it will do the end application 100% for sure. So that is one way we are trying to mitigate risks of whether repeat order will happen or not happen. Second is we take a large portion of contract with the result which converts all of electronics, mechanical systems, to a multidisciplinary technologies involved, which makes it difficult for some other organization to do this. But also see that we solved all the problems internally. So that is the way we are doing. So we can't give you a reason, but I'm thinking that today, in the last 2 years, whatever development we've done, I think largely maybe 90%, all of them to mature into production contracts. When it will do, I do not know. But we have done our end of the job. It all works as per specifications. So I would expect that it should all go into mature production contracts. It is more important now than earlier because government is very clear that made in India solution available, they're not going to allow imports so easily. And as long as we're being world class and the customer, the user, the Army, Navy, Air Force is happy with what has been delivered to them, I don't see why they want to look outside. That's a broad engagement I can tell you.
And sir, in terms of like scale, like how much is the scale up? For example, you mentioned that you delivered some radars in 2015-16, and now we can see as a result of that you are getting large orders. So like what has the scale up been like this?
Yeah, see, this is again depends on the program. For example, it is a project-based numbers. For example, radars, let's say NPR, Ashwini, Arudra. They did one and we did a part of it. They are on credits for 8 radars. If it is Ashwini, then we did large part of the electronics, but it is 18 radars. So this depends on project, depending on the requirement. The other portion is platform-specific things. For example, if you say RWR or SDR, if it is going to be put in LCA, the number of LCA requirements, Mark 1A, then Mark 2, then AMCA, then it's going to put in MIG. MIG already, let's say, they're importing it. Su-30 is going to come. Su-30 numbers are 250. So we don't know how the upgrade programs are going to go. But the numbers can be large, and it can be varied. It can be more over many years because they can't down all the aircrafts. So there are two coins. One is project. Second is programs like these airborne programs where numbers can be larger. Otherwise, when the MOD buys, they buy specific quantities. So it is limited to the specific quantity. Though we call it production because it's not one-off. We call it production. If it is radio, for example, maybe radio reliability 1,000, maybe 140, maybe 2,000. So that is how the tenders come. But it is not one. So it is duplicates, multiple size of what the initial. So it will be much larger. It distributed over many years, so it gives you stability.
Sorry to interrupt. May I request Mr. Shahil Sharma to please rejoin the queue? We have participants waiting for the turn. Thank you. The next question is from the line of Aditya from Securities Investment Management. Please go ahead.
Hi, sir. Thanks for the opportunity. So as the company will be getting into more system integration jobs rather than just being a component or sub-component manufacturer to get higher value orders, I wanted to understand how will the company be able to compete with players like BEL and other private players who are much bigger than us. So can we imagine the capabilities these guys have, and which are the areas you think we may fare better against them? And secondly, will the margins also see a drop as...
Interrupt you, Mr. Aditya. May we request you to please restrict your queries to one?
Yeah, so this is just the second part of the question. What will the margins see a drop? Because these players are making 20 to 25% while we are making 40% plus margins. So should we see a drop in margins in the future?
Okay, see, first is can you compete with players? See, we are going to address opportunities where we believe we are better placed than the competitors. That is when we will try to address the market. See, the difference is that we do ground-up design and development. Whereas somebody does integration, the cost of the product is far higher for them than for us. And if you've already written off the development costs and revenue expenses in the previous years, then I'm that much more confident that we can price it now without worrying about development costs. We can do this. Second portion we do is we build the building blocks and build the end systems. Building blocks allows us to go and address various different kinds of products where I distribute development costs over many things. So we have a different model to do this. This model is tough because it takes enormous number of years to come up with a competency model and product model here. But that is behind us. So now the opportunities are large, so we should be able to look at it. Yes, we believe we can compete with them. We have it's a multidisciplinary subject which we have. We build our own electronics, we build our software, we build our IP, we build our mechanical systems, the structures. We design everything in-house. We manufacture everything in-house except mechanical. We integrate, we test, validate. We have full certification process for all platforms. So we built up a competency matrix. We can address the market. Okay, so we can do it. As far as margins are concerned, I don't know why you say, yes, obviously our margins is slightly more because we design everything. If somebody buys, that margin which is buying on from the other company is also ours because we make the raw material cost. So our margins will be higher than others. But then I can use this margin to be as a bargaining margin. We can compete better with a maybe reduced margin and compete. So going ahead, if the integrated systems come into picture, margins will probably shrink, but revenue will go up, bottom line will go up. So we need to do that. But the second point he made is, DL is making 20%, but I don't know because the bottom line is very high in DL. Though the turnover is there, look at the bottom line is 18% to 20%, which is quite high. So obviously they are also making margin somewhere on single vendor contracts. But effectively what you're saying is true, but we will have better margin because the design IP margin also is there.
Thank you. The next question is from the line of Alisha Mhavla from Envision Capital. Please go ahead.
Hi, sir. Good afternoon. Just wanted to know what is the margin differential between our production and developmental orders?
See, if the production is followed or development contracts, the margins will be same. If the production orders are so-called tender contracts on MOD tenders, it is going to be competition driven. So the margins will vary with respect to contract and the competitive scenario and how big the contract is and what is the appetite to take the contract. So it will be more competitive driven than this. But if it is earlier developed contracts resulting in a production contract, price has already been fixed. The price discovery process is over. So one would expect the normal course of action, similar margins.
So the reason for asking this question is that while we've seen almost 60% growth H1 23 over 22, it also coincides with higher developmental revenue and hence a larger shrink in the gross margin and the EBITDA margin. And now that the order book is also more skewed towards the development contracts, just wanted to understand the margin trajectory and hence the question.
Okay, see, development contract doesn't mean margins will be less. Actually, development contract margin should be more, but we absorb the development cost ourselves because to be competitive on those tenders. So, again, it is based on competition and pricing that each contract has different kinds of margin numbers. Again, what we say is we attempt to keep this at 60% level this year is what we are saying. Based on contracts which we will execute this year, we have some idea what our costs are. So I'm telling you this. Going ahead, if you're going to quote for an MOD tender or something else, it is going to be very contract specific. One differentiator is that since we work with others who also buy and integrate and we design from scratch everything, our margin should be on a better, higher scale than the others, subject to everything else being same. That's all I'm saying. So we will drive for a slightly higher margin business because we need that margin to push our contracts and do more development in India. We are not trading on any parts, so our margins are slightly higher.
No, I understand that, but when we talk about higher margins at 40%, this is industry-leading margins. And while for this year the company is fairly certain of maintaining these margins, just wanted to understand going forward what seems like a more sustainable number in light of how our order book is currently skewed.
Yeah, EBITDA margins will be around 40% now. Maybe it will jump to 35%, 37%, depending on the contract mix of contracts which we do and how we want to scale. The scaling doubling of 1.5 times, 1.7 times we do, and we've got a competitive margin. Obviously, we need to look at how if bought outs are more, then the margins will come down. If it is only electronics, our margins remain. But we have to buy power systems, buildings, trucks, etc. Obviously, we can't keep those kind of margins. We need to get the end product, so the margins will come down. So that's why I'm saying it will be very, very specific to contracts. We can't say. Till now, we've been doing largely electronics, so margins will be there. So integrated margins will come down, but it is okay because the size of the order which we're going to take is very, very large. So it is, I believe, it's on the right path, and that is how the growth will happen. But we will maintain reasonably higher margins than others because we do a lot of development in-house.
Okay. And in Hem Shakti and Arudra...
Ms. Mhavla, but may we request you to please rejoin the queue?
Sure, thank you.
Thank you. The next question is from the line of Abhishek Singhal from Naredi Investments. Please go ahead.
Thanks for taking my question. In the second half, 100 people will be hired, which are less in compared to first half. Any specific reason? And the new facility will also start in Q4. And any token order receipt for new facility? Thank you.
First question is, what did you say? The H2 is higher than H1. What did you say?
In the second half, 100 people will be hired, which are less in compared to first half. Any specific reasons? And also new facility start in Q4.
No, I don't understand the first question. In the second half, 150, what I didn't understand. What did you mean?
in second half, 100 people will be higher, which are less in compared to first half. Any specific reason? And also we start a new facility in Q4.
Okay. See, people hiring is an ongoing activity in the office. It has nothing to do with quarter or half. We continuously hire people based on need. We believe we are scaling the company substantively, and we need capacity building at all levels. So from senior management hires to marketing to program management to at management level plus engineering level, design level, we are going to hire people all around. So this will go on, and this has nothing to do with H1 or H2. Only thing is, what really happens after June, July, a lot of people join because that is when the colleges get over, and July, August, they start joining. So, but that's the only reason. Otherwise, we keep hiring. As far as quarter 4 is concerned, we are saying the facility, already part of the facility we started utilizing. The first PAR, Prushyapur Jeda, we delivered to, we quickly finished that portion of the facility so that I can integrate the facility, integrate the radar there. So last March, that is 22 March, we actually had the first radar installed there in one part of the facility, and the acceptance test was done by Navy there. And then June was the second PAR which acceptance done by Navy. Third one is done by Air Force in September and we dispatched. So some part of the facility on the radar hangar we're already utilizing. The rest of the facilities is getting completed, and then over a period of time we'll move because we don't want to upset our existing production. So the equipment which is coming in new also we're putting in the existing production facility, and then slowly change it, slowly move into the other facility in phases.
Okay. And any token order received for new facility?
No, it's not facility. It's not a new thing where we need to get an order for the facility. Existing contracts will also be done in the facility. Actually, we're going to move production from this facility, new facility fully in over the next 6-8 months. We'll move it because that will be dedicated production infrastructure. We'll convert this to development infrastructure in the existing facility and R&D testing.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Jatin Jadhav, an individual investor. Please go ahead.
Hello. Am I audible?
Yes.
Good afternoon. First of all, congratulations on a great set of numbers. Based on the presentation you've given on page number 24, you said proposed expansion of 30 CR towards upgrading and expanding existing facilities. So the guidance which you have given is including this or excluding this?
So it's all as per original plan. We are not doing anything which is not part of plan. We're actually spending more than 100 crores in the infrastructure. They think as part of the infrastructure spend, the last quarter, the capital work in progress in this time is 30 crores.
Yeah. And the second question is the export turnover. What are the major clients in the export turnover? Who are the major clients? If you could just shed some light.
Major turnover, export turnover from UK. It's for an airborne avionics, which is designed for them. We're quite happy. We dispatched some 100 systems in the last 5 years. 4 orders are expected. And we got some more development orders from the same client for an airborne system where development is also done and production done by us.
Okay. And just one final question.
Mr. Jadhav, may we request you to please rejoin the queue. We have participants in the queue.
All right. Thank you.
Thank you. The next question is from the line of Narendra, an individual investor. Please go ahead.
Hello, am I audible?
Yes. You are.
Yeah, thank you for the opportunity. So you mentioned that the Indian defense market has huge opportunities for a company. So my question would be, what kind of opportunities do you see in the export market? And also, what are the restrictions that could prevent us from exploiting these opportunities?
Indian defense is largely import-centric, and that has been opened out to Indians. So the opportunity is going to be largely Indian now. First, you need to prove the systems in Indian scenario before you expect, end systems to be exported. It will happen in parts of the system can be exported. For example, most exports is happening is on build to print. The design has been done abroad. They come here to India to reduce the cost or get it manufactured, reduce the cost, or because it's obligatory for them to do offsets. So that is the kind of imports, mostly exports we're doing. Some amount of development imports also happening by people like us. Little bit is happening. We expect to scale that as we go along. But the size of business, what we are expecting in Indian market is going to outpace the export by leaps and bounds. But yes, we would want to maintain export. We have quoted with some location in Europe. We expect an order, radar order, our radar also to be exported to in NATO country. We expect the contract to happen in the next month or so. It's been declared L1. So it has to happen. But then these are one-off systems. We're also trying to work with South Korea, try to do what we're doing in India, can we export to South Korea? We've also exported one system like that to South Korea, about $1 million to Korea 2 years back. Some more orders are expected in different configurations. So we are looking at it, but our active participation is more on an Indian context because there's a huge, huge opportunity here. And the focus is to address that opportunity, which is the greenfield opportunity in India, compete with the foreigners and build here. That's where we are.
Okay, sir. Thank you. Thank you, and all the best for the future.
Thank you.
Thank you. The next question is from the line of Shirom Kapoor from Prabhudas Lilladher. Please go ahead.
Hi, thank you for the opportunity. I was just wondering if you could give us a split within your production contracts of which ones, how much comes from a tender versus what comes from the initial development contract that transfers into production. Do you have a split on that?
Yeah, if you look at, I'm not able to give you a split, but I'll tell you, the large production contract we got on a tender is this precision approach radar, which is about totally 380 crores, including maintenance, or 250 odd crores for the delivery of radars. That is a large production contract on tender base. But rest of the development contracts, what we get is also tender based. And what happens based on previous tender development contracts we got, it seems it is successful. A variance of that is required for various contracts. DRDO gives us some contracts for this adaptation on the aircrafts. Those come on single vendor. So that is really what happens. And when that is completed, trials, then companies like HAL or BEL, who get the production orders for the end system, gives us single vendor contract, which we term as production contracts. This is how it happens on all of them. So production contracts, if it comes from HAL and BEL, will be only single vendor contracts. If it is MOD, even though we call it production, this is against a tender. It will all be only tender contracts because MOD will not give a single vendor contract. Third, mostly development contracts and DRDO is open tender or limited tender. But off late, we are also getting single vendor contracts in development mode also because of a competency model which is there. We do end-to-end, we are able to do, and there is a time constraint for delivery to end users. Then we are able to get customers are willing to look at data patterns as single vendor contracts because delivery constraints are they are 9 months delivery, 6 months delivery. When you do that, it becomes difficult for them to split it into various vendors and give it because a common capability doesn't exist in one company. In this case, they come to us. I don't have the ratios, but this is how the contracts come.
Okay, understood. Thank you so much.
Thank you. Ladies and gentlemen, due to our time constraints, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you very much for this interest and the questions asked. If you have further questions, which is a lack of time we could not answer, kindly send the questions to Go India advisors. They will have them brought to us to give the appropriate answers. We can answer all the questions you have. We are very, very happy and grateful of that you all participated in this in large numbers. Please be in touch and answer all the questions. As far as the market is concerned, Indian market, defense is growing. Again, I will recap. We believe that by doing the right strategy and a little bit of help from God, we should be able to grow it quite well. We believe that we are on a good wicket at the present moment, quite excited on the opportunities lying ahead of us. Thank you very much, all of you.
Thank you very much.
Thank you.
Thank you, Go India, for organizing this. Thank you.
Thank you.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.